What's up, fellas? This is really important. Bitcoin could explode in the next 3 hours. Bitcoin has a major macro test in exactly 3 hours. We get two numbers that I am watching closely: the GDP and the PCE inflation. And depending on how these two numbers combine, the reaction on Bitcoin could be very different from what CT expects. Now, BTC has already had a huge move, so for me this isn't just whether Bitcoin can pump another few percent. The question is whether the macro environment can actually validate the move we just had. First, the PCE. This is one of the Fed's key inflation measures. The obvious bullish interpretation is inflation cools, the Fed has more room to lower rates, the financial conditions get easier, good for Bitcoin. But I think that analysis is incomplete because at exactly the same time, we're getting GDP data. And the combination of these two numbers matters much more than either one individually. Here's my framework. Scenario number 1. Inflation cools and growth remains resilient. That is basically the sweet spot that we need right now. Inflation comes down without the economy falling apart. That gives the Fed more flexibility without creating recession panic. For risk assets, that's probably the cleanest bullish outcome. Scenario number 2. The inflation remains sticky and growth stays strong. That is not disastrous, but it keeps the higher for longer narrative alive. And if bond yields start moving higher again, Bitcoin can feel that pretty quickly. And as everybody has been talking about the bond yields recently, this is the chart of it. But the scenario 3 is one I think that CT massively underestimates. Growth deteriorates sharply. Everyone immediately screams, recession, rate cuts, money printer, BTC up. Not necessarily in my case, to be honest. That's a huge difference between the Fed cutting because inflation is under control and the Fed cutting because something is breaking. Bitcoin likes easier liquidity. It does not necessarily like the panic that forces emergency easing. And the absolute worst combination? Weak growth with sticky inflation because the economy wants lower rates. But inflation makes it difficult for the Fed to deliver them. That's the macro trap. So when the numbers hit in 3 hours, I'm not gonna be trading one headline. I'm watching the combination. Cooling inflation and resilient growth, I get way more bullish. But do we get sticky inflation and weakening growth? I get much more cautious. My bias on Bitcoin is still bullish, but after a move this aggressive, macro now has to confirm what price has already started pricing in. And remember this, CT wants rate cuts. What Bitcoin really wants is easier money without the economy breaking. We will find out which direction we're moving, and if you want to see the actual levels and trades I'm watching around the release, my private group is completely free, so feel free to join in the link below, because there is actually a setup AI that is roasting me every single time that I'm taking a trade. So just take a look at it, join in, you can chat with me, you can see the trades in real life that I'm taking. Peace.